Is this on? Yep. If everyone could take their seats, I think we're about ready to get started. This should be a great session, as they all have been this morning, but you can't go very far these days anywhere without hearing about cyber AI, or in today's session, big data and how it's going to change the world for us, right? So I'd like to introduce today's moderator, Dorothy Andrews, who's the Chief Behavioral Data Scientist for Insurance Strategies Consulting, with 25 years of actuarial and statistical modeling experience, and now I understand you're stirring behavioral psychology into all of that. So you're going to lead us off in how big data is going to save long-term care. Thanks, Dorothy.
Thank you. Well, good afternoon. I hope everyone enjoyed their lunch. It was great as far as I was concerned. We have 4 people on our panel today. We have our Dr. Who of the Helping Bees, Tim McNeeland of GE Capital, Shawna Myers of GE Capital, and I'm sure I don't have to say who this is, right? Everyone knows who this is, Commissioner Ommen. Okay, so we're going to ask him probably the hard question first. He gets the first hard question. So, Commissioner Ommen, how would you characterize the current state of LTC in Iowa?
Yes. So I got some, the short answer might be obvious, but I brought some information along that I guess I would describe as illustrative of our situation here in Iowa. For this year, or just this past year, our combined reporting loss ratio for all Iowa long-term care carriers is over 108%. And that does not tell the whole story, because there's a significant range among the blocks and the carriers in terms of loss ratios. So although 108% is the average, there are some pretty extraordinary extremes in that. Our population is just over 3.1 million, and we are down to 135,000 lives that are covered, which is about 4.3% of our population that are insured under traditional long-term care contracts. So Medicaid spend down remains a plan for many Iowans, and I have always said that if spend down is your plan, you don't have a plan. But unfortunately, it does remain the best option for a lot of Iowans, and it is a very significant challenge for our Medicaid system. The long-term care rates, they of course vary based on issue age, again, and as well as among carriers. But an example of some recently approved rates will give you a flavor of their affordability here in Iowa. So I use a benefit platform of the benefits for $150 a day benefit with a 90-day waiting period, and again, lifetime benefits under that contract. For an issue age of 50, the rate is $2,500 or $2,552. For a issue age of 70, it is $7,970. But if you add the 5% compounding to the plan, for an issue age of 50, it is $5,665. And for an issue age of 70, it is $15,000. I would just advise you that the insurance commissioners, the NAIC, under the executive committee, have formed a task force to look at this. I mean, clearly these rates are of significant concern. As we've gone through to where we are today, most states have looked at under actuarial principles, have looked at where the markets are, and have been working with carriers to try to bring those rates into line with what is needed in order to make this market work. And I would say that although insurance commissioners may have different opinions on this, Maine Insurance Commissioner and our NAIC President, Eric Chapa, has made this really our first priority as commissioners. I think it's fair to say that. So I would say that although rates are on the table, as far as I'm concerned, everything is on the table. And so, Dorothy, at this time, I don't really have any answers, but I'm here to listen to our panelists because you may have some questions for them.
Well, I am eager, just as I'm sure everyone else is, to hear what they have to say regarding how big data can save long-term care. So let's turn it over to them.
Great. So we're going to do a couple things. One, we have a few slides that we'd like to walk through. And for me in particular, I do have some just basic 101 slides that I'm going to go through very quickly. I'm sure there's a lot of expertise in long-term care in the room, so I'll keep it pretty quick. But just in case there's some people in the room that need a little bit more background information. Okay, so there's a lot of information on these slides, and as I said, I'm going to go through this pretty quickly. And basically what this slide is talking about is that the majority of Americans, 70%, that live to be 65 years old will need some type of long-term care. However, most Americans are not properly prepared for the financial need. Only about 10% of people have some form of private insurance. So there is a huge need. Americans are underprepared. There is an insurance aspect to this, and the legacy blocks are troubled. But it's not only an insurance situation. It is also a societal need that we're facing. As far as insurance goes, we basically had two waves of products. I refer to them here as 1.0 and 2.0. 1.0 being standalone coverage, so your basic long-term care coverage, and 2.0 being more of your combination products. Most of that is life insurance. So just a quick visual here so you can see where the funding is coming that covers long-term care services. Those two different shades of blue are both public programs, Medicare and Medicaid. You can see that kind of orangish bar there that's very small is the insurance funding. So it is today playing a small role. Again, there's a lot of words on this page. Some people like to think of long-term care insurance as a form of health insurance. I personally try to resist that because when you think of health insurance, it's usually treatments and procedures and medical care, whereas long-term care services are really assisting you with your daily life. They're not necessarily treating your ailments. So they're things like helping you to take a bath or to get dressed or providing supervision. The benefits are typically in the form of a daily benefit with a maximum for a period of time, and they may or may not include inflation protection. And of course, I'm describing the standalone products, the 1.0. These products, when they were priced, they were largely intended to be level pay. So this graph again shows that premium is level throughout, but of course the claims start very low and grow very high as the person ages. So you start with excess premium and you finish with excess claims. So what went wrong with these first products? A myriad of things. Interest rates were much higher when most of these products were priced. They're considerably low and have been low for quite some time now. The insurance companies misjudged how many people would keep their policies based on other similar types of products. What we found is that the coverage is valuable and people find it valuable and they hang on to it. This has led to the need for changes in rates and a lot of carrier exits. So there's not a lot of carriers in the marketplace today offering standalone insurance. This chart is similar to the one I showed a couple slides ago where you can see the excess premium in the early years. And what we're really intending to show here is that while we can change the rates, that is a lever that we can pull, because those premiums come in the early years, the insureds continue to pay premium, but they lapse or die or go on claim and their premiums are waived. And there's only so many years remaining for the insureds to continue to pay premium. So it's very difficult to make up for those losses or to become in a good place through the mechanism of strictly rate increases. This is just a quick visual on kind of where we've been in the standalone market. You can see the sales really peaked in the late 90s, early 2000s. That's when a lot of carriers started to realize that the rates were too low, and many carriers left the market. So this is the slide. I refer to this as my money slide. What can we do about this insurance that still exists and people still pay? As I said, premium rate increases is a lever we can pull. It has limited impactfulness. There's other levers that insurance companies can focus on, like investment income and expenses. We can also offer to the insureds to reduce their benefits in order to counterbalance their rate increases or when necessary in case of insolvencies. But the other thing that we can do is focus on influencing future claims. And long-term care insurance is interesting because unlike life insurance where you're alive or dead, or in some cases health insurance where you really need some type of care, the insured does have some control over how they use their resources. They may have family or friends, and there is some judgment involved as to when they seek care. And so if we find ways of aligning the interest of the insurance company with the insureds, that can help. That can be one mechanism for influencing claims. The other thing so I've kind of broken it up here. How do we make sure we're paying the right claims? Making sure that people are truly claim eligible, that there's no fraud in the system and those types of things. Insurance companies, for the most part, are focusing on this today, although there is some more room for movement there. But the exciting place for me, where I think big data can really come in, is how do we find ways to influence, through prevention and detection, to change the experience of our insureds. And it's such a win-win situation where if somebody's able to remain independent longer, that's great for them as well as being great for the insurance company. So I, of course, want to mention the 2.0 version, which is more of the combo products. This is, and you can see from this slide, the dark blue bars are the standalone, which we've already talked about, where the sales are decreasing over time. The light blue bars are the combo products, so you can see that that is a pretty viable market, and the sales there are increasing over time. And these products are typically life insurance. They are very similar to the standalone products as far as the triggers and the mechanisms there. It might be an acceleration of death, but a lot of times it also includes an extension. Could be 2 or 3 times their death benefit that they can use towards long-term care. And this can be great for the insured. We sometimes say, live, die, or quit. If you live, there's a long-term care benefit. If you die, there's life insurance. And if you quit, sometimes there's a return of premium feature. So it can be a great product for the insureds. They also sort of overcomes that use it or lose it objection. From the insurance company standpoint, the risk profile is different. You do have better alignment with the interest of the insureds. And there is some natural leveraging between the life insurance element and the long-term care element. So at this point, that's it as far as the background comments. So now kind of getting into more of the main part of this presentation, which is how can we use big data in this market. And we kind of thought about this in 2 ways. One is how do we get better coverage? As I said in my earlier comments, there's only about 10% of people that have private insurance. So how do we expand that? And one way is what I just described through the combo products. And then we will also address how can we use big data to influence the experience for the in-force blocks that we have. So starting with how do we expand coverage, one way that's interesting to me is to look at what's being done on the life side around accelerated underwriting. And this really is to look at alternative sources of data and information in making that underwriting decision. The point here is to have a better customer experience rather than fluids and a very long process. This becomes a little bit more seamless, and typically we're looking for the best insureds out there who are typically also the ones that are most at risk of getting frustrated and leaving the process. If I'm sitting here, I'm very healthy, I don't think I'm going to die anytime soon. This is really a pain, forget it, I'll do it later. And so we're really looking for those types of risks that are out there, identifying those and making it a more streamlined process for them. And I like this slide if you recognize the gentleman here. He's from Groundhog Day. Please don't make me talk to this guy. So again, it creates that more seamless technological experience. Now, a lot of this is going on in the life side today. Obviously, there's a lot of sales and a lot of carriers on the life side. The reinsurers have been heavily involved here in analyzing the data and using machine learning and all of those kinds of things to identify, how can you make predictions based on the information available. We don't have that in the long-term care space. We just don't have the same kinds of volumes and interest in creating this type of streamlined underwriting. And the predictors of life insurance may not be comparable to long-term care. And obviously, a big component of long-term care is cognitive impairment. And so we rely heavily on cognitive testing today. So I think those are things that we'll have to overcome to be able to really enter into this type of underwriting. So with that, I'm going to turn it over to Tim.
All right. Thank you. So forgive my voice a little bit. As a lot of people in the Midwest, I'm suffering from a late winter or early spring cold, so I should be able to get through this. But I want to talk a little bit about the next part of it, which is many of the blocks in the U.S. are closed blocks of long-term care. And there's really only 3 levers financially that move that. Shawna mentioned those. One is the premium you get, and while we're working and applaud some of the efforts the NAIC is making to help level that playing field from a rate perspective. You have that, you have your assets that you can manage, and there's only so much you can do there. And then the third part is your claims. And as an industry, we're a ways behind on anything creative to help manage that, such as the managed care groups, or in particular those entities that are working with the state Medicaid budgets, where they have a little bit different relationship with the consumer, where if you want to have coverage, this is where you're going to get your services. But I started thinking a little bit about what does retiring look like. I'm 55. My wife and I are at the end of the baby boomer era, and as we start thinking about what's next, right? And so we live out in the country, and we started thinking about where do we want to live next when we no longer want to take care of this place that we've got. We're empty nesters. And how do you go about doing that? And intellectual curiosity being in this industry, I started wondering about how much guidance is out there to be able to help people think about. So if we want to move into a place, our own place, and we want to be able to age there for the foreseeable future for as long as we possibly can, what does that look like? And so I went and started doing some research, looked at AARP, looked at a lot of the different groups' websites, and tried to do just some searches on aging at home, aging in place. And I found that it's really a very difficult topic to be able to research accurately. There's a lot of philosophical white papers that have been done on why it's good, why aging in place for not just this country, but for the world is a really good thing, not from just a financial perspective, but from a human experience perspective and a family perspective. But there's really 4 things that I observed that you really have to understand. One is there has to be some mechanism to be able to do a better job to educate consumers about what does that look like. If you want to be able to age in place, what do you have to start thinking about when you're 55 or 60 or 65 or maybe even 70, depending upon your strategy late in life? How are those things come together? The second is you have to understand the financial mechanism, right? What does it cost to do the different things that it takes to be able to retire in place or age in place? The third is the services that are available. And those are also, while they're really just being developed and being modified, they're still hard to find your way. And Char is going to talk quite a bit from an entrepreneur's perspective, just exactly what are the things that can be done today. And then finally is the technology. With the InsurTech movement, and the SOA is working on doing an InsurTech session later on in the year that's going to focus on those technologies that are being developed to help with this very issue worldwide, because it really is a big thing. But those 4 things are really hard to figure out today as a consumer, and that's a shame. But what it does is when you think about it, it really creates a really interesting position for a carrier. And it's not, I would contend, just a carrier issue. As Shawna suggested, depending upon what numbers you look at, the private insurance industry insures somewhere between 6 and 10% of this risk. So much of the risk, as Commissioner Ommen pointed out, is really, it falls to the state Medicaid budgets, which is why some of those groups are more active in this. But if you think about those 4 components and how they can work to be used to be able to help consumers think about this and how big data can be used, I'll give you some examples. There was recently a medical symposium done with the SOA, and the 3 of us were parts of that, where we brought in medical experts in gerontology and in sociology and in Alzheimer's care and cognitive diagnosis and in aging to think a little bit about what is the future of aging in this society going to look like. And some of the things that came out of that were really fascinating, but in particular, what I took away, and for those of you that are medical professionals in the audience, please forgive my simplistic view of this, but what we learned is that it's quite likely that people are going to, as a rule, live longer, independent longer, but because of that, almost everybody at the end is going to have at some period of hopefully briefer dependence where they're going to need some real help. And because of the way medical advances work and technology works, it will be more accessible to those with higher socioeconomic status in the early going than those without at the lower end of that status. So as an industry, how do we think about that? Well, a couple things that big data can help us look at. One is, who are our clients as an insurance industry? What do they look like socioeconomically so that we can understand how this aging change is likely to be able to impact them? And then how do we use that in working with groups like Char and other such entities to be able to use not only big data but AI to be able to go in and really understand what are the clients that we have, the customers that we have, what is aging going to look like for them, and what are the hobbies and the habits that they have? You look at some of the technology many of you have probably learned about, smart homes and what you can do, and I won't get into the details. I think Char will talk a little bit more about that, but that really helps us with pre-claim intervention, because what we want to be able to do is to be able to help people to stay independent longer, and then if they so choose, it's their choice. But this is one of those areas where our interests are very aligned, and we have the ability to be able to, as a society and as companies, to be able to help people, educate people, and show them how do they really get out of life what it appears that they really want. If you follow claims patterns, with the growth, much of the growth being in home health care, and you know just anecdotally, if you're talking to people in that stage of life, you'll typically hear things like, if my kids think they're going to get me out of my home to go to some facility, they're going to do it with me kicking and screaming all the way because I want to be able to stay home and age. And then how do we work with pre-claim or claim management tools that digitize data? Much of what we know about our customers is on paper or on a screen, but it's not digitized. So we're not able to use it and to be able to do some of the things that allows us to segment our risk and really tie that to intervention, to do real-time analysis, and then to really act more akin to what the managed care organizations do. But those are things that as organizations, we have to work together. I think it's bigger than one company. It's probably an industry issue, and beyond that, we're also, with this same SOA group that has worked with the Medical Symposium, are trying to broaden our discussions to some of those that are in managed care and working with the Medicaid populations as well to take some of their learnings to be able to start getting ahead and helping our customers to be able to get what they really want out of this process. So with that, I'll turn it over to Char to talk a little bit more in detail about many of these things.
Great, thanks. So I'm particularly interested in looking at the interrelationship and the interplay between technology, which all include data and automation into this, with our end user. And because the end user is so interesting in how they interact with the world, not only with technology, but how they interact with the modern world at large, services and tech included. Because a lot of us who are developing products and services, we're focused on the end goal of aging in place. Or if we're sort of geeks like me, we think about really cool technology, and wouldn't it be great if we could have sensors all over the home? But what it brings up are issues like privacy and tech support issues that we have to think about because of adoption rates. Typically, if we look at the population we're developing tools for, there's a little bit of stranger danger and there's a lot of pride. And so we have to be a little bit careful with some of the user experience design that us technologists are doing. So education is a really big component of everything. So when we look at sort of the care continuum, the broader network, we incorporate family members, which could be paid or unpaid, and informal caregivers who could be compensated or not. We need to be developing tools, and a lot of emphasis based on education is to harness this particular workforce, I'll put that in quotation, because they provide a very significant network both on delivery of care but also social support. And this should be the goal of almost all of our solutions. Are we really broadening out that care continuum so that we can disperse some of the costs across multiple channels? This is sort of a catch-all slide just to talk about a wide variety of sort of name brand, broad areas of relevant interests. I think it's key to, again, to focus on technologies like wearables and how are they going to interact with an actual human in real life? How do we deal with those privacy and tech support issues, which are non-trivial when it comes to adoption? Our company in particular, we're looking at manners of activity monitoring so that we can promote real-time interventions at the exact moment that they might be needed. And finally, here are more services encompassing facility-based care as well as home-based care that, again, further broaden out the network for a family caregiver. So these are possess the ability to leverage ways to reduce the burden on a primary caregiver who oftentimes is also a policyholder. So for instance, adult daycare, it's a terrible name, but a fantastic service that I think a lot of carriers can leverage through just promotion of education and connecting people with the service, especially for those with early stage dementia.
Thank you. That was really awesome. Great backdrop for some of the questions that I now have for all of you. Shawna, can you help the audience understand how the industry is currently pricing long-term care products so regulators aren't losing sleep at night?
Yeah, great question. As actuaries, of course, what we love to do is gather data and information, especially on our insured populations. And this is no different. And the good news here is that when these products were brand new, we didn't have much of that type of data. We now have 20, 30 plus years of insured information that we can now study and analyze and understand better, especially for the older age populations where there was little data before. Now, that's not without its challenges because those policies may have been underwritten differently, they may have different policy language, but we do work very hard to pool as much information as we can and learn as much as we can from that. Now, we can't just stop there. The old joke about actuaries steering the car by looking in the rearview mirror. And as Tim talked a little bit about the medical symposium that we held last December, where we attempted to get individuals from lots of different backgrounds of expertise and bring them into the room, because it's important not only to understand what has the history been and use that to project the future, but also think about the different factors that may change the future. What's happening with medical advances, what's happening with technology, and how are those things going to influence the future? So we need to continue to try to gather as much different perspectives and different sources of information to also use that to predict the future. On some areas like voluntary lapses, I like to say that we basically have removed the risk. Because most carriers are assuming very little lapsation at this point. There's been a lot of rationalization of our assumptions as well, as far as, we've obviously been in a low interest rate environment for a long time now, so we no longer are surprised by that. So all of those things are helping us to have more consistency in our pricing.
And with that new pricing structure, when do you think profits might emerge on some of this business? Is that an easy question to answer?
Well, I guess it depends on how you measure profit. From a GAAP perspective, we project to earn profits in almost every year except for the first year. And then as experience emerges, it may be the same or different. On a statutory basis, a break-even year is typically between 7 and 10 years. And we like to think about combo products as the new product. In reality, some of the combo products have been in market for 20 years or more. So, it does continue to be innovation and new products, and some of those aren't old enough to realize profitability yet. But some of those other combo products have been around long enough to realize some profitability.
I find the combo products pretty fascinating. Can you give the audience maybe just a little visual for help them understand what that means to have a combo product?
Sure. I mean, basically a combo product just means it's long-term care combined with something else. And the something else is typically a universal life policy, although it could be other things. And so you buy the policy and you have a certain death benefit. If you have a need for long-term care, you can accelerate that death benefit. And then depending on the form of the policy, you may be able to extend it as well. And the typical design is being able to extend that death benefit for an extra 1 or 2 times that death benefit. And the structure of those benefits is similar to standalone, where you're receiving maybe a daily benefit or a monthly benefit up to a maximum. And so then that will equate to a certain period of time before you've exhausted that death benefit. But if you don't use the long-term care benefit, or if you don't accelerate all of the death benefit, then when you die, you receive that remaining death benefit. So that's where, my comments earlier of live, die, or quit, and that's really helpful for a lot of insureds because, with standalone, they feel like I pay all of this premium, and then what happens if I die before I need care? For these products, obviously, you would still have that death benefit.
Excellent. So this is the last question, and then I'll give you a break.
Okay.
So what kinds of variables are you putting into your pricing equations for these products?
Yeah, great question. We are using more and more predictive analytics, and I'm certainly not an expert and won't give you a tutorial on that. But one of the basic tenets is you're looking for variables that are good predictors of certain outcomes. And so, one of the more interesting ones in long-term care is we find a heavy correlation with whether or not an individual is married or single. And logically, the way that we sort of think about this is when you're married, your spouse is there to care for you. I know personally I had a health event, and you don't think anything of asking your husband, or in my case my husband, hey, give me a hand, help me out of the tub, or help pull my shirt over my shoulder here. It's just something you do in passing that you maybe don't even give a lot of thought to. But if I had been an individual that lived alone, that would have looked very, very different, to where I would have needed to have a lot of coordination to, say, have my daughter come by at a certain time of day, that sort of thing. So, a lot of the other variables, age is a big one. Younger insureds obviously have less need. There may be less anti-selection when they're buying earlier in the process. And then a lot of the other usual candidates, like how much coverage are they buying? So when you put all of that together, we end up with massive variations on our future claims, similar to a mortality for a life product. So there are a lot of components there.
Great. So I'm glad you talked about some of these variables, and especially pointing out, younger people have less of a need. So Tim, how do you suppose the industry is going to go about trying to educate younger people about the need for long-term care products to get them into the process a lot sooner?
Well, that's a great question. I think most of what we've found, speaking from past experience with other entity that was in new sales, our company were a closed block, but I think when you're trying to get people to think about that, typically this activity is driven by family experience. And so when we used to survey the people that were buying our policies, especially when they were younger, it was usually because they had recently watched either their parents or their grandparents go through it, and they had made the conscious decision that they didn't want to rely on the family to have to do that. And so much of it is just the ordinary course of life and the way that people trigger any life insurance purchase, especially in the case of the combo product. The one advantage of the combo product is it kind of combines life events and gives them maybe a little bit easier way to think about that at an earlier age.
So just going back to some of the comments you were making about legacy blocks of LTC, how do you propose big data being used to resolve some of those issues?
So I think there's two areas that we're trying to really research. And when I say we, it really, I think, as I had mentioned earlier, is beyond a company. So we're talking a lot with ACLI and with other companies, and then with entrepreneurs, creative entrepreneurs such as Char. There's two things. One is we need to be able to use big data more effectively to really understand who our customers are, first of all, because Shawna used the comment about the actuaries driving forward while taking a look in the rearview mirror. One of the things we learned that we all heard from the medical field is that that doesn't work. You can't think about tomorrow's events by looking at past generations, because the generations that will go forward are different than past generations. And so we have to find a better way to be able to understand not just who our customers are from a socioeconomic demographic perspective, but we have to be able to find ways to understand, which is kind of the step two, is what are the things that they're doing on an individual basis? So what are the hobbies? What does this person's world look like? And if you listen to some of the sessions earlier, for example, I was listening to the gentleman from MasterCard talking about what MasterCard and Visa know about us as individuals. If you have a phone or if you have a credit card, it's amazing. And while I certainly want to be absolutely respectful of privacy laws, I think we also have to be able to think about how do we use what we know can impact the way a person ages and their risks around aging, things like falls, things like weight control, things like exercise, cardiovascular situation, all those things, smoking cessation, all those things that are really important. The more that we can do to be able to educate and to be able to perhaps even incentivize, maybe even in some of the rate increase work where there would be a discount for some sharing of information to help us allow to get better to be at being able to take care of these people. I think it's those two areas that we're most interested in getting to as quickly as we can.
Excellent. So, and I'm glad you mentioned patients falling. In 1985, I co-authored a study on patient falls and related variables that was published by the Human Factor Society. And then I repeated that study like a couple years ago, and I saw it with some of the very same variables still contributing to patients falling, in healthcare facilities. So, Char, what I'd like to know from you is, I looked around your website. I thought it was a very impressive website. All the different, I don't know if anyone's been there, the helpingbees.com, I think is the URL. Can you talk about how you monitor like conditions in the home, surrounding falls or any other kinds of events that might pose a risk for?
Yeah, sure. So we do that in a number of ways. So I mentioned different technologies that you can use, from IoT sensors to sensors in general in the home. I think those are great. Those are passive. I'm a big believer in humans being able to do complex data processing very quickly. So our choice is to put a caregiver in the home. What's great about long-term care insurance, which is very different from either in the private consumer market or in our post-acute health care, is that the long-term care carriers require for reimbursements for you to fill out the activities of daily living that a caregiver might actually do. This is what Shawna was mentioning, the ADLs. Not only do you have to complete what you did, but the level of care you've provided. So with us, through a mobile app, this is a necessary component to getting your money. They tap it in, what they do. What we do is we have a data analytics engine on the back end. So now we'll track 11 to 14 different ADLs or IADLs. So it could be toileting, bathing, medication management, errands, housekeeping. And we're looking for trends now. Are they getting worse? Are they getting better? And so from here, we're able to now not only immediately reach out to the claimant if we start to see a trend curve that looks worrying or a great one where they're getting better, to encourage that. We can also reach out to the caregiver and start to say, hey, I noticed Mrs. Smith is getting a little worse when it comes from transferring. And what you'll find out is the caregiver is struggling and they want the tools. And they're a great conduit to introduce new solutions to.
So how do your helping bees assist inside the home?
So we have two models how we interact with carriers. We do personality-based matching for home caregivers. So anybody who needs home care will go ahead and use personality among a few other different metrics in order to do a match, sort of a direct connection model, which is different from home care agencies. So we'll look at skills and interests. But we also license our technology to carriers. So we don't necessarily have to do the match to grab the data. In fact, the majority of the data we grab are not helpers that we've matched. So we license our technology to the carriers. The claimants choose to opt in. It helps with their invoicing process, and at the same time, it gives us this portal into what's happening in the home, and to propose a lot of these really cool interventions that are happening. The pace of discovery on some of this technology is getting very, very quick. Within the last 5 years, the number of insurtech startups has grown, but also aging in place has grown just because of venture capital. And so the problem, though, is who do you deploy these products to and when? And so our licensed app-based technology tells you both of those things.
Excellent. So speaking of data, what I would like to know from each of you, if you had your choice of like 5 data elements, what would they be? What top 5 elements would you like to have in your models? Shawna, maybe I'll pick on you first.
I'll start. I'm an actuary, so and Tim alluded to this. We don't have a lot of digitized underwriting information. I feel that was really a big miss for us as an industry. If we had good data, around cognitive screens, blood pressure, weight, all of those different variables that we looked at when we made a decision about whether or not to accept a certain risk, if we had captured that, we would now be able to study, how predictive are those variables of eventually turning into a claim or developing certain needs. And as Tim was alluding to, whether we had that at time of issue or had ways to gather that type of information today, and we could use that to better make predictions, that would allow us to better assess whether or not we have the right reserves and whether or not we've funded the need properly. And that, to me, would, be extremely helpful.
Tim?
I think that's great. So on top of the physical information that perhaps you could get with different wearables these days, I think I'm going to give you kind of a couple broad categories, and they're kind of habits and interests, because the way a person that is beginning the aging, I guess we begin the aging process when we're born, but begin the later life aging process. Those people that are 55, 60, 65, wherever you want to think about that, the habits and the interests that they have really shape differently the risks that we see that can change the way that they're going to age and can change the need for them to be independently living safely, and then also going over to needing care. And then the only other thing I would say is that there's this broad category of information around early detection that is being refined for cognitive impairments, and that's a very specific need, and that drives a whole different set of discussions about their how long they can live independently safely. There's been some really interesting work done by Johns Hopkins and about how to create a safer environment for mildly or even moderately cognitively impaired people working with their informal caregiver environment, their family. And so those two broad categories of areas would probably be the areas that I would like to see us be able to get some information.
Excellent. Char?
All right, I'll throw some wild cards out there. So I think I would want to know how many rugs are in the home and how much percentage is of their home is carpeted. I'd like to know total number of stairs or steps. I want that broken out into entryway and total within the house. I would want to know how many adult daycare centers are around that area, so density. A mini mental status exam as well. So this is just sort of a precursor to mild cognitive impairment and dementia. I'd like that result, and if we're waving a magic wand, I'd like that over time so I can see how those evolve. And then I'd like to know how old the operating system is on their cell phone, what version they're running.
Excellent. Excellent, I like that.
Yeah.
I didn't hear anything about genomics or epigenetics. Is that on your list at all? Anyone's list?
Yeah, that's a complicated question. We probably need a whole nother session on that.
Okay, so I know we're going to open it up to Q&A. So the last question, yes or no question for everyone here on the panel. Will big data save LTC?
Can I say maybe?
Okay. Yes, no, maybe?
Yeah, it's not a yes/no answer. I think it's going to make it much better, I believe, than what it exists as today.
And I think there's the potential for, as I said before, those real win-win moments. If we find ways for people to age differently, age in place, better prevention, that can really have a positive impact for everyone.
I would add, I hope so.
Okay.
I think it, to the point just made, I think it can move us forward, and I think that that's really critical at this point in time.
For sure. I think it for sure will save it. I think this industry is built on paper. I think that's borderline insane. I think that there are amazing tools that are being developed. There's a lot of technology. There's a lot of innovation that is existing that it's wide open. And what's great about long-term care insurance is they control the purse strings. So it's not like healthcare where, as a small startup, we would butt up against, well, you don't have a diagnostic code with Medicare. These carriers, they can push forth any innovation they want and very quickly. So I think for sure data is going to make tremendous, it'll save the industry.
Excellent.
Yeah, it'll save the industry. It may not save every carrier, and that's a timing issue for us as both regulators as well as the industry, as the time is now.
Okay, perfect. So I think we're opening it up to questions. I don't see the students that were in here before with the microphones. Oh, there he is, right there. Does anyone have any questions from the audience? I see one back there. Ah, there's Martin Snow.
Thank you very much. Thanks for some very good presentations. The question I have relates to privacy and ethics issues. There's tremendous amount of information out there, whether it's on Amazon or Facebook, that one can look at. Did someone just join a smokers club? Or on Amazon, did someone buy an incontinence product? All sorts of stuff. Now, I certainly understand the ethical issues that would be involved in using such data if it was used for pricing or underwriting. But let's say that you already have an in-force policy holder and you want to use that information in some type of machine learning, big data scheme to figure out which customers need proactive intervention, whether it's to help them proof their home so that they don't get, they don't fall and trip or do something else like that. How would you feel about the use of such data in that type of circumstance?
Yeah, so it's not an easy question to answer, right? I think there's a line there someplace, which I'm not sure I know where it exists. I think about myself and I think about my parents who are in their late 70s, and I think about their desire for privacy combined with their desire to live independently and healthy for a long time. And we've got to find as an industry, as a society, the right way to be able to use this inside of the laws and what we're doing. An example was used in an earlier session about Progressive, the car company that gives you potentially a discount if you put this little box in your car. And so people are opting in. And so perhaps we have to get to that methodology at least to be able to start. But as an industry, as a long-term care industry, we're so far behind in gathering this data and doing those things that anything that starts us to get a better feel for who our customers are and what their risks are really helpful. And in this case, not just to us, but I really feel strongly that it's really helpful to them if we can do it on the right terms from a public policy perspective.
Yeah, I love the fall prevention programs because they're pretty easy to understand and have had some great impacts. And if you look at some of the tests that have been done there, they're really using the data element of age, as they're filtering and then going to those insureds on a voluntary basis. And they've had pretty good adoption rate and pretty good outcomes as well. It's always amazing to me, the number of issues that are caused by something as simple as, adding a handrail or tacking down a rug. So, that one's more simple than certainly some of the things that we can dream up. To your point, we could go so far as to do data mining and, determine that somebody's activity level, could be increased, and that kind of thing. But even just looking at some simple things like age trigger, we've had some success.
Yeah, and we're particularly bullish about that. We're going to roll out an aging in place content platform to do what many industries have done already. J.Crew knows more about me than I do when I click around, but what Tim was alluding to, it's very difficult to find aging in place resources. Creating one sort of content platform with modern digital marketing where I sort of customize a personalized journey as you go through the internet while throwing in wildcards to see what you click on. Well, now I know what that user likes while delivering them particular resources. So we can bundle it up and give it to carriers so that now they understand a little bit more about their policy block while, again, delivering great products and content.
Do you have some other questions?
Okay.
Do you want to take one more?
Oh, there's a question.
What's the predicted value of the age of the operating system on the phone?
So it was a wild card question. I just threw it out there, but if I'm going to now have to back it up, I'll think a little bit quicker. The idea is when it comes to adoption, if you're updating your phone, if you have a smartphone, so if I know you have an iOS or Android, then I know that you have one and that you perhaps might not be too, you might be open to new technology. And updating your phone in general, it can be sort of a cumbersome process. So we have an app-based tool. One of the hurdles is downloading an app. What is the actual hurdle? What is my password? And so I want to know, for me, it's sort of like Minesweeper. I click on this, I know a lot about sort of what you are, like how old your phone is, et cetera.
All right, well, thanks everyone for your good questions, and thank you to the panel and to the moderator for all the information today. It was an interesting discussion, and now if everyone can head upstairs, we've got some excellent keynote speeches ahead.